worksheet. Is it required? No. Starts with a T. What is it? It's a tool. It's a tool to help the accountant build financial statements. It literally looks like numbers went with confetti because it's splashed all over. But I think a trained eye, a student who's been working with accounting since September, like you guys have, can see there's balance sheet accounts, there's income statement accounts. We know about trial balances and adjusted trial balances. So I'm starring these headings. Why? Normal balance. This adjustments column is a bit of a hiccup, but let me just reiterate the supplies car. I jump into my supplies car and I strap on my seatbelt. It's a debit-based account. So if I cruise along, I hit a road bump, a credit road bump, am I going to add or subtract that $1,500? I'm subtracting it because it's a debit-based account. So if I hit a credit, out we go. And then we update. So really, if you think about worksheets, it's just shuffling numbers from one place to another. If we hit road bumps, we have to either add or subtract them. Give me an example of where we'd add instead of subtract. Sure, that would work too, but I just already circled revenue. I find that it's got credit balance. I'm cruising along and I find another credit. So then we're going to add that to our car. And that's a typo. 10,000 plus 400 is not 10,600, but whatever. I'll just stop there. There's 5 steps. We do our trial balance, then we do our adjustments. Tell me about how they're labeled. Letters instead of numbers. Then we do the adjusted trial balance. Out of those 3, what's the true balance of the accounts? Column 1, 2, or 3? 3. Then we build income statements or balance sheets based on wherever their home is. We've got this riffraff section down here that I don't love. I wish it was alphabetized up here. I'm still trying to come to terms with it. And step 5 is this muddy part down here. We are pulling down what number for each column? The smaller number or the bigger number? The bigger number. So like here in this case, 10,600. I need them to equal because they don't equal up here. So then we're going to fill in the gap on whichever column needs more numbers added. I see a debit on that side. This one has to be a credit with the same number, and voila, it works. When revenue exceeds expenses, we have a net income of, in this case, $2,860. Could you do this on a test? A week from today. It can't be next Wednesday because we have digital citizenship 5th hour. No, because I'm teaching digital citizenship to other kids. So, and the idea of using next Wednesday as a backup, gone. That dream is gone. Yes. Mm-hmm. So you asked this question yesterday too. Yes, yes. Okay, so back down here, these, okay, so if I'm looking at, this is income statement, this is balance sheet, okay? Initially, these numbers do not equal, okay? The number is the difference between those two numbers. Okay, well, we need our numbers to equal. Accounting needs to equal. So they don't equal there, so we need to force them to equal. Okay, I'm going to switch pen colors if I can see my pen. What is this shenanigans all about? I don't even see my pen. Well, this is not the pen, but oh golly. Whatever. So I bring down my biggest number. I bring down my biggest number. I got to force that number to equal. So on the one that's smaller, I'm going to find the difference. They don't equal. I need them to equal. You're going to take the difference between the two to get the number. What's the number when revenue exceeds expenses? Net income. Who gets that in a credit format? The capital or owner's capital. Yes. They're not going to equal. Then you screwed up your numbers, yes. Because this debit and that credit do need to be the same number. Good question. That's where I said this chapter evokes crying. That's the net income, because our revenue is probably going to exceed the expenses. By how much is net income? Just like when you were doing your income statement. You know how you start with revenue and your credits, or your service revenue and your rent revenue, and then you have your expenses. Same thing. This is the same thing because this is an income statement. So you need to think about that. You've got 10,600 minus all the expenses. This is exactly the income statement. And you know at the bottom of the income statement you say net income or net loss? That's what this is. It's just in a different format. Bradley? Because it doesn't equal and we need it to equal. And that's where accounting is like cool and beautiful. It's got to be a debit. That one has to be a credit. And voila, the numbers mesh. Because if you think about rolling through the three financial statements, this is the income statement. Then we give the owner's capital to the owner's equity statement. And then the owner's, that net income all gets funneled into the balance sheet. So the net income the owner gets to keep. Any more questions before I move on to closing entries? This is not the last time you're going to see a worksheet. We're going to do it with problem A. We'll do it with problem B and the practice test. So I know that seems scary that this is all going down a week from today, but you can thank No School November and Senior Mentorships for that. Also very good experiences. Both. Let's close the books. You will find that on the last day of a fiscal period, we need to decide, all right, what's going to go with our previous year and stay with that previous year, and what are we going to roll into our next fiscal year. At the end of an accounting period, the company makes the accounts ready for the next period. So on December 31st of 2018, it might be New Year's Eve, but we have to also stop and say what's going to get closed or zeroed out and what's going to roll into the next fiscal period. Temporary accounts are closed. Another word for that is zero out. And it's like they get packaged up to that fiscal year and put on the shelf. Any revenue accounts, any expense accounts, and the owner's drawing account. So these two are, we're closing out all of the income statement, all revenues, all expenses, and then one thing on the balance sheet, owner's drawing. We literally are going to close them out, zero them out, get them to have zero balances, package them beautifully into a box, and put them away for the 2018 year. We're going to do the same thing the next year, and the next year, and the next year. So if we end our fiscal year as the same thing as the calendar year, what would be the balance of these temporary accounts when you start your next fiscal year? Zero. Now you have to put them somewhere. You don't just burn extra cash you have laying around that you made from revenue. We have to put them somewhere, and I'm going to teach you how to do that in closing entries. Permanent accounts are not closed, rather they're rolled into the next fiscal period. Like if you have 10 pencils left, you're not going to just throw them away. you're going to put that in your supplies for the next fiscal year. If you still have $100 worth of prepaid insurance, you're not just going to throw it away. So any asset you're going to keep and use the next fiscal year. Any liability accounts, I have a feeling all those people still want to get paid. So if you owe money to people, you're not just going to be like, it's a new year, I'm not paying you. No, you have to roll those over, and then the owner's capital account. Basically, all of this gets funneled into the owner's capital account. The owner gets to keep all the money, revenue, the owner has to pay all the expenses, and the owner has to settle up on any drawing that he or she took out of the business. So they don't go away, they just all get shuffled or funneled into owner's capital. What does it look like? Closing entries are basically the transfer of all of the income and drawings. Think of it like a funnel into capital. So if I had to draw a picture, revenue, expenses, drawing, we know that's money in. We know these are money out. Think of it like a giant funnel into capital. The owner gets to keep all the revenue and have to absorb revenue, expenses and drawing. And all of it gets funneled into capital, the overall worth. So if I had to put 2018 on top of this, we get it all to capital, and then we box it up and say, we're done with you. We're going to start now a new year with zero balances. We are going to use an account called income summary that I want you to treat like the funnel. Income summary is the funnel. It's used for one day to shuffle, to siphon all that money in and money out to the capital account. So think of income summary as a one-day account masked as a funnel. Let's try this. I like my version better, but this is the same concept. You should have this key somewhere. Do you have a key, but it's blank? Yes, closing entries 1, 2, 3, 4. Very good. So it's this. Yes, I would like you not to write this down because we're going to do them in a certain order instead. I know this is kind of small, but it allowed me to put everything on one page. I hope that's okay. So since I don't have this on my sheet, I'm going to have you review. And try not to look at your notes. What are temporary accounts? Revenue. What does it mean to close them? What's another set of words for that? Zeroed out. Why? What are we going to do with them? Throw them away? They get funneled. I'm going to draw my funnel one more time here. Whoa. They get funneled into capital. What else am I not going to throw away or close? Any liabilities, any assets, and capital. Very good. I need a thinner pen. Okay. So we're going to put fake balances in. We're not going to even do anything from the book. We're just going to make it really easy. Let's say we're sitting here with $1,000 in sales. Can you write that in? And we're going to have 4 expenses there. I'm using a little cheat sheet so I can make my numbers work. This is what yours is going to look like eventually. We're going to have the advertising expense, and that's going to have a $50 balance. We are going to have the utilities expense, and that's going to have a $25 balance. We're going to have rent expense, $125. and miscellaneous expense at 25. And we also are going to have, we'll just put my name in, Mars, drawing. I'm the owner here. That's going to have a $100 balance, and that's a debit. Okay. Capital, we're not going to have anything there. That's fine. So as you can tell, there's a certain rhyme and reason. There's a certain order you do closing entries. What do we want all these accounts to be? 0, okay? So let's make the T into an I. Why is it doing this to me? We want it to be 0. We want all these to be 0. Why? Because we're closing them out. You told me we close revenue and expenses. We also need to close drawing. We want those all to be zeroed out because this is going to reflect 2018. Okay. Well, just by putting 0 doesn't mean we made them 0. We have to force them to be closed out. And the first closing entry, what do you think it's going to be? What are we going to do? We're going to close revenue. So let's do this together. I'm going to switch pen colors so you can see how this works. All right. So if I need to close sales, I need my $1,000 balance to be 0. Am I going to debit or credit $1,000? Why? Because we're not adding to it, we're getting rid of it. I see a debit. What else do I need? Credit of $1,000. Where do you think I'm going to temporarily put that? Eventually it'll go to capital, but where are we going to use it to funnel just for now? Income summary. So if I had a debit there, this one has to be a credit, and I'm going to put the word sales behind there so I remember, oh yeah, that's how I close sales. So this is a funnel account that I'm going to use temporarily to get everything funneled down to capital eventually. I have a debit, I have a credit. Let's journalize. I'm not going to switch pen colors because it's going to be annoying. So I had a debit of $1,000 and I had a credit of $1,000. My debit was to sales. My credit was to income summary. I'm not going to go post that, so I'm not going to have a reference. I would. I'd need to post it, but we're not going to do that. That's as simple as it is. Could you have done it without the T's eventually? The T accounts, I think, are a really helpful tool so you can see where the numbers are being funneled from. 1,000 minus 1,000 is 0. I got that one closed out. Check. I did the first one. Next thing, what are we going to do? Close all expenses. Okay. So if I want a $50 debit to be 0, am I going to debit or credit advertising expense for 50 bucks? Credit. Utility expense, what am I going to do to get it to 0? Credit 25. Rent expense, credit 125. And miscellaneous expense, credit 25. So I had a $50 balance, I need it to be 0. I had a $25 balance, need it to be 0, and so on and so on. You do the opposite to force it to be 0. Where am I going to dump it just temporarily? Income summary. You do not have to put 1, 2, 3, 4 debits. You can put, is it 225? Yeah, 225 as one debit equaling the 4 credits. And I'm going to put expense out here. Just by looking at the income summary, do I have a net income or loss? Okay, here's where things get really freaky cool. Hold the excitement. I'll get to the freaky cool part in a minute. Let's go journalize. How many debits did we have? We had one. This time we debited income summary for $225. How many credits did we have? I see 1, 2, 3, 4. I had the advertising expense. I had the utility expense. I had the rent expense. Sorry, this is a little hard to read. I'm getting used to my new screen up here. So advertising expense was credited for 50. Whoa, I thought we always debited expenses. What? We're zeroing them out. We need to get them. We need to force them and siphon them to be zero. So we're going to do the opposite. Bam, 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 bam. I got those all to be zero. They're done. They're done. We didn't throw them away. We put them in the income summary so we could funnel them closer to capital. Speaking of capital, our third step, according to your notes, what are we closing next? No, we're not. I see a number 4 by drawings. Look for your number 3. We're closing the income summary. Well, where in the world have we had income summary before? We haven't. It's just used to funnel revenue and revenue and expenses. By the way, we closed all the expenses as well. So here's where I think this gets pretty cool. To close income summary, I'm going to bring down the biggest number. And make it equal itself. I feel like I've seen this before. On the worksheet. And then we're going to put a big gap here. Remember what I've kind of been preaching here? We're going to take 1,000 minus the other number. 775 will make 225 equal 1,000. This is the bottom corner of the worksheet, visually, another way. Remember how at the bottom of the worksheet our numbers didn't equal right away? And we pulled down the biggest number so they do equal, and then we fill the hole with the difference? Bam, there it is again. We debited it somewhere. Where are we going to credit this one? Who gets to keep the money? Oh my gosh, this is so cool. You mean to tell me the lady up on front with the headset and the marker is actually knowing what she's talking about? Yeah, this is full circle. It's coming around full circle. There's a debit, there's a credit. That's the same as what just happened on the worksheet. I'm going to journalize it. I, for some reason, got my pen colors switched. When we do number 3 to close income summary, by the way, we're done with that. We had a debit to the income summary because we're basically closing out the income summary with $775. Who gets to keep the money? Mars Capital. This transaction that happened right here is the bottom corner of the worksheet. Hopefully now you see where the numbers come from a little bit better. Cool? This Mars check was taking money out of the business, $100. So we will see that as a hit. It's the last of the funnel to close out the books. So we're going to close drawing. So I see she had a $100 balance. We're going to need it to be 0. Are we going to debit or credit drawing for $100? Credit. What would happen if we would debit? We'd have $200 owed. So there's a debit. What's the, I said that, sorry. There's a credit. What's the other half have to be? Doesn't it make sense that that's a hit against the capital? So now we're just going to journalize that. Mars, comma, capital sees a hit. This is a bad thing because Mars, comma, capital is sitting there at $775. Not anymore. What's the real balance there? $675 because she got a little bit greedy. And then we have Mars, comma, drawing, zeroed out 100. This was one giant funnel to capital. Money came in, good thing. Money went out, bad thing. We had to close income summary, which we know is really net income. And then we had to close drawing. It literally all funneled down to capital. 4 closing entries. Could you do them without this mess? Absolutely. I think by a week from now, you wouldn't need this sheet. I will provide it to you if this is a helpful tool. Did that feel easy? Let's switch back to the notes as just a review. Now I think you're going to be able to look at something like this and go, oh yeah, easy. Okay, so revenue gets funneled here. Expenses get funneled here. These two numbers are not going to equal. This probably isn't in your notes. No. You're going to bring down the bigger number. In this last case, it was 1,000. And then you fill the hole. That gets plunked into owner's capital. Owner's drawing gets plunked up to capital. I like mine better. I like my... The key, and this is what I already did, we close revenue, we close expenses, we close income summary, we close drawing. Another word for close is zero out. This key went into depth a bit more. Close revenue into income summary, close expenses into income summary, close income summary into capital, close drawing into capital. That's a closer look at it if you want to write those down. I know I didn't put them on my little activity. Here's again a look at what the actual entries would look like, because what I did with the big T, that was just a tool. Here's what the actual entries look like. We'd post them. We didn't do that step. Then we're going to make the third trial balance. It's called a, brace yourselves now, the post-closing trial balance. So we have a trial balance, we have an adjusted trial balance, and now we have the post-closing trial balance. This is really the end-all, save-all of the account balances. This is what we would bring, never mind, it says this is what we'd bring into 2019. We're not going to throw our $15,200 worth of cash away. We're going to bring that to the next month or next year. So I lectured and we did a problem. I just kind of made up my own stuff instead. Okay. Tomorrow, we're going to talk about reversing and correcting entries. We're not going to do them. And I'm also going to teach you about a classified balance sheet, leaving Thursday and Friday to get going on end of chapter work. It'll take me almost the entire hour tomorrow to talk about a classified balance sheet. We'll do more stuff with it on Thursday. So we are ahead of schedule. I don't know, should we talk about reversing and closing entries now? No is okay. Okay. Says the gang that has to take a test a week from today. Okay. I always take my own tests. I will.